How to invest in stock for beginners. Hello, and welcome to our channel, Pursuit of Wealth. This channel is your ultimate destination for learning about finance and wealth, investing in crypto, informational and educational trends in finance management. If you are someone who wishes to become wealthy and looking for smart money management options, then we are fortunate to have found each other. Investing is a method to put money away while you're busy with other things and have it work for you so that you may reap the full benefits of your work in the future. Investing is generally known as a process of achieving a good outcome. Warren Buffett, the legendary investor, defines investing as the process of putting money out now in the hope of collecting more money later. Let's imagine you've saved aside $1,000 and are ready to dive into the world of investing. Now, how will you invest it, and how will you decide which company is the right choice for your investment? Well, don't worry at all. My video today is a comprehensive guide for beginners to invest in stock successfully. Sit back, relax, and enjoy. 1. The first thing you need to do is create a brokerage account. This account is required to make stock market investments. 2. The next step is to fund your brokerage account by sending funds from your bank account to make stock trades. The quantity of money you invest is determined by your risk tolerance, ambitions, and the amount of money you're willing to lose. 3. It's very important to mention here that while the stock market tends to gain in value over time, there can be short-term market volatility that puts your money in danger. The minimum deposit requirements for an investment account. A minimum deposit is required by many financial organizations. In other words, unless you deposit a specific amount of money, they will not approve your account application. Some companies won't even let you create an account with a deposit of $1,000. Before determining where you want to establish an account, do some research and read some broker evaluations. Some companies may not have a minimum deposit requirement. Some brokers will provide you with a specific number of commission-free deals just for signing up. Others will frequently cut charges, such as trading and account administration fees, if your balance exceeds a specific level. There is no such thing as a free lunch. Despite the fact that many brokers have recently raced to reduce or eliminate trading costs, and ETFs provide index investing to everyone who can trade with a bare-bones brokerage account, all brokers must make money from their customers in some way. In most circumstances, your broker will charge you a commission every time you purchase or sell shares. Generally speaking, trading commissions start at $2 per trade and can usually go up to $10 for some bargain brokers. Some brokers do not charge any trading commissions, but they compensate in other ways. Brokerage services are not provided by any charity organizations. These costs can rapidly increase and have an impact on your profitability depending on your trade frequency. Trade is an order to buy or sell shares in a single firm. And it's also important to remember that stock investing can be expensive if you jump in and out of positions quite often, especially if you just have a limited amount of money to invest. If you wish to buy 10 different stocks at once, this is considered 10 distinct deals, and you will be paid separately for each one. For example, let's say you decide to invest $1,000 in the stocks of those 5 firms. To do so, you'll have to pay $50 in trading fees if the amount is $10, which is 5% of your $1,000. After trading expenses, your account would be reduced to $950 if you invested the entire $1,000. This equates to a 5% loss before your investments have even begun to yield. If you sell these 5 stocks, you will have to pay the trading expenses again, which will be another $50. It would cost you $100 to complete the round trip on these 5 stocks, or 10% of your $1,000 original deposit. Step 2. Different investment modules. Some investors want to manage their money's growth actively, while others prefer to set it for a longer period of time. Exchange-traded funds, or ETFs, index funds, stocks, bonds, and mutual funds are all available through more typical internet brokers. The type or module of investment depends on the kind of brokerage you choose, and to make that decision, you'll have to know about these brokers. Let's begin. RoboAdvisors. You must have heard about the financial crisis of 2008. After this very crisis, a new type of investment advisor emerged, which is generally called the RoboAdvisor. Eli Broverman and Betterment's John Stein are widely acknowledged as pioneers in the field. Their goal was to employ technology to reduce investment expenses and streamline financial advice for investors. Other robo-first firms have sprung up since Betterment's inception, and even major online brokers like Charles Schwab have introduced robo-like advising services. According to a survey by Charles Schwab, by 2025, 58% of Americans would receive robo-advice in some form. A robo-advisor is perfect for you if you want an algorithm to make financial choices for you, including tax loss harvesting and rebalancing. You can invest through your employer. If you're on a limited budget, put 1% of your income towards your company's retirement plan. You may simply neglect such a major contribution. Contributions to work-based retirement plans are deducted from your paycheck before taxes are computed, making the payment even less painful. If you're happy with a 1% contribution, you may gradually increase it when you obtain annual raises. The extra contributions are unlikely to go overlooked. If you have a 401k retirement account at work, you may already be investing with even shares in your future with mutual fund allocation's own firm. Investment through online brokers. Brokers might be full-service or low-cost. Full-service online brokers. As the name indicates, full-service brokers provide the complete spectrum of conventional brokerage services, including healthcare, all monetary things, and financial counseling for retirement. Full-service brokerages offer minimum account sizes of $25,000, and all accounts more than this amount are standard. Traditional brokers justify their high fees by providing extensive advice tailored to your specific circumstances. They normally demand significant fees and work with high net worth individuals. The demanded amount can be a percentage of your assets that they manage, a percentage of your transactions, and occasionally a yearly membership fee. Low-cost online brokers. Low-cost or discount brokers were once the exception, but today they are the rule. Many discount online brokers also provide a set-it-and-forget-it robo-advisory service, which allows you to choose and place your own trades. Online brokers have incorporated more features, such as instructional content on their websites and mobile applications, as the financial services industry has developed in the 21st century. Furthermore, while some cheap brokers have no minimum deposit requirements, you may be subject to additional limitations, and accounts without a minimum deposit may be subject to fees. How do you choose which investments to make? According to Beckerman, you may acquire insight into how organizations and sectors are functioning by looking at their data. For example, we can get a sense of when specific companies or industries are valued in bubble territory, when price-to-earnings or price-to-sales ratios are inflated, he adds. Investors must also analyze a stock's worth in order to decide if it is cheap or overvalued and how to proceed with the investment. Stock prices, according to Beckerman, provide investors some insight into the mood towards specific sector groupings. Some stock recommendations for beginners. Choosing the correct stock might be a fool's errand, but investing in high-quality equities like blue chips and dividend-paying firms is frequently a sound plan. Blue chips are popular among investors because of their potential for development and stability, as well as the fact that they pay dividends. Microsoft Corp., MSFT, Procter & Gamble Co., and Coca-Cola Co., KO, are all well-known blue-chip corporations, PG. Coca-Cola, for example, pays a 3.1% dividend yield and has a low volatility index with a share price that has fluctuated between $43 and $56 over the previous 52 weeks. Dividends can provide investors with much-needed revenue. Long-term investors that use a buy-and-hold strategy by going long on equities can gain from market value appreciation. If you acquired AT&T shares at their initial public offering price of $1.25 in 1984, your investment would be worth considerably more now, since the company now trades at roughly $29 per share. You must conduct comprehensive due diligence. This includes developing a basic thesis and believing your stock choice based on that study, and knowing when to take your losses and keep emotion out of it when the business changes substantially, sales cut in half, fraud, executive team cutbacks, etc. It might be difficult to keep up with the news cycle around a company's stock performance. Instead, experts advise ignoring the short-term noise so you can keep your long-term approach in perspective. Warren Buffett, the billionaire and famed investor, recommends consumers to buy and keep stocks for decades rather than continuously selling and repurchasing them. Track your portfolio. Now that you've opened a brokerage or advisor account, it's time to keep an eye on your portfolio. Your advisor will take care of managing your portfolio and tough lifting over time and keeping you on track. You'll have to make swift and smart trading choices if you're managing your own portfolio. Is this the right moment to sell a stock or mutual fund? Are you planning to purchase more or sell more if the market drops? Was the last quarter of your investment a hint of selling or acquiring more? These are difficult considerations for both experienced and fresh investors. Although, if you're an active investor, you'll need to keep up with the latest news in order to make the best judgments. To avoid spooking yourself, it's a good idea to just glance at your portfolio at certain periods of the month or during tax time. The financial world might be intimidating when you first start investing. There's a lot to discover. The good news is that you may move at your own pace, honing your abilities and knowledge before moving on when you're ready. I hope after watching this video, you'll be able to invest in the stock exchange successfully. Please subscribe to the channel, like the video, and press the bell icon for more amazing content about wealth management and finance-related videos. Success is coming your way. Keep your doors open. See ya till the next time.